Welcome back to the deep dive. We are diving into something. Well, it sounds a bit like science fiction, honestly, but it's very much real, happening right now. Imagine this. You swipe your credit card, maybe getting coffee, fill in the tank.
Yeah, everyday stuff.
Exactly. And instead of getting, airline miles you might never use or some store points, you earn actual cryptocurrency.
Actual digital assets, yeah. Straight into your wallet.
It sounds wild.
But what's really fascinating, as you said, is that this isn't some far-off prediction for 2030.
Right, not some obscure startup.
No. Our sources make it really clear. This is, and I quote, happening today within America's credit unions.
Credit unions. That's the surprising part, isn't it?
It really is.
You think community, reliability, maybe a bit traditional, not necessarily like bleeding edge blockchain tech.
Definitely not the first place you'd look.
But here they are, moving first.
All right.
So, okay, our mission today for this deep dive, let's unpack how these traditional institutions
Historically traditional, yeah.
are using what the sources call blockchain rails and compliant crypto integrations, how they're basically rewriting the rules for credit card rewards.
And we're drawing on analysis here, looking at insights from industry folks like Marshall Hayner.
Right.
He's the CEO of Metallicus.
Okay.
And looking at actual real-world examples. We want to show you that the old way, the proprietary points model, it's not just being tweaked, it's being replaced by something built on, well, decentralized tech.
Okay, let's get into that, this shift. Because the immediate thing, the tangible part, is how it changes the experience for, us, consumers.
Right.
We're talking crypto rewards, instantly usable on just normal purchases.
It goes way beyond those closed-loop loyalty programs we've all known for decades.
Yeah.
Where your points are stuck with one airline or one store.
Totally.
And this points to a bigger structural change in finance. For years, crypto was all about speculation, right? Buy low, hope it goes up.
Buy and hold, yeah, HODL.
Exactly.
Yeah.
But now these integrations, they're focusing on utility, making it useful.
Practical use.
Practical use, right at the point of sale. The sources call this a shift in how Americans will engage with money, using digital assets for something immediate. That's the key difference here.
And who's seeing this momentum? You mentioned Marshall Hayner from Metallicus.
Yeah, the sources quote him. He notes this whole digital asset movement is brewing across the credit union space.
Okay, why the credit unions? Why isn't it, Chase or Bank of America leading the charge here? Seems like they'd have the resources.
That's a great question. And it gets into the strategy. Credit unions are member-owned, fundamentally.
Right, different model.
Their mandate is serving their community, giving value back. They also face a huge competitive challenge from the big banks and the nimble fintechs.
They need an edge.
They desperately need an edge. And this tech-compliant crypto integrations, it's their path. It lets them offer modern features without the massive legacy systems, the baggage the giant banks have.
So that structure, being smaller, maybe less complex internally, lets them pivot.
It's a huge advantage in this specific case. Now, okay, sounds good in theory, but where's the proof?
Yeah, show us the receipts.
Exactly. Well, our sources point to a really specific, interesting example. St. Cloud Financial Credit Union. They launched a blockchain program.
St. Cloud Financial Credit Union.
Oh,
wait, in Minnesota?
That's the one. A local, community-focused institution in Minnesota. And they're becoming a pioneer in compliant blockchain rewards tech.
Wow, okay.
I mean, that right there, for me, that just perfectly illustrates what's possible when tradition meets transformation.
It really does.
It proves that tech is mature enough, it's secure enough, it's compliant enough for, mainstream use in the most scrutinized, community-centric part of U.S. finance.
It sends a message.
A huge message that smaller players can lead on infrastructure innovation if it serves their members better. They're showing you can have compliance in innovation.
And the little guy, so to speak, can sometimes move faster.
Absolutely. Now, connect this to the bigger picture.
Yeah.
The why. Why are they doing this?
Right.
Competitive necessity.
Right.
Simple as that. The sources lay out 4 specific strategic capabilities that these crypto and blockchain integrations unlock.
4 capabilities. Okay, let's break these down. This seems crucial for understanding the why.
It really is. The first one, and this is the most obvious to you, the listener, is the ability to offer rewards.
The crypto rewards we talked about.
Exactly. Giving members crypto for everyday spending. And why is that better than points? Well, crypto is usually liquid, it's transferable, often global.
You actually own it immediately.
You own an asset with real-world value, unlike proprietary points trapped in some system.
Okay, simple, powerful draw for members. But the second capability sounds more technical. system connection. What do the sources mean by connecting payment systems directly to blockchain networks? What are these blockchain rails?
Right. This is the really deep part. It's more than just a shiny reward. When a credit union uses blockchain rails, they're essentially adopting a secure shared ledger technology. And it bypasses a lot of the old traditional closed payment infrastructure. Think about a normal transaction.
Yeah.
You've got processors, clearinghouses, maybe multiple banks in the middle, each taking a tiny slice, adding delay.
That's why settlement takes days, right?
Precisely. And why rewards processing can be slow and costly. By connecting directly to a blockchain, maybe using stable coins or other regulated digital assets, settlement time can drop from days to minutes, maybe even seconds.
Wow, days to minutes.
That efficiency slashes operational costs, which is huge for a nonprofit like a credit union.
And they can pass those savings back.
They can reinvest it back into the member experience, maybe offer even richer crypto rewards.
Okay, now this is where it gets really interesting for you listening. It's not just a tech upgrade behind the scenes.
No, it impacts the experience.
You're getting a more direct, verifiable system.
Yeah.
Value moves almost instantly. It removes all that clunky old infrastructure.
It's a foundational shift. And that huge leap in efficiency, it feeds right into capability number 3.
Yeah.
Market competition.
Okay. How so?
Well, this integration allows credit unions who often struggle to keep up with Silicon Valley tech to actually compete head-to-head.
With the fintechs and the big banks.
Exactly. They can match the modern offering, the speed, but they bring their unique advantage: trust, community focus.
So they're using this decentralized tech to level the playing field.
That's a perfect way to put it. They offer the modern digital asset experience, but they stand on that bedrock of regulation and community trust they already have.
They avoid becoming obsolete.
Keeps them relevant, vital. And the fourth capability kind of wraps it all up: innovation leadership.
Right.
It positions these credit unions like St. Cloud as genuine leaders, innovating, but without abandoning their core mission.
They're innovating for their members, not just for profit.
Precisely, for the community's benefit.
Okay, so let's put those 4 together then. You've got the cool crypto rewards, the super efficient system connection underneath,
The blockchain rails,
the ability to compete with the big guys, and leading innovation responsibly. What's the big picture view?
Well, it synthesizes that vision from the sources. A future where rewards, banking, and blockchain are just seamlessly connected.
Not separate things anymore.
No, not 3 different silos fighting for your attention.
Yeah.
It becomes a unified digital ecosystem. And it starts with something familiar, like swiping your card. The reward isn't just tacked on, it's your gateway, your on-ramp to this next-gen financial infrastructure.
So just to recap the core idea here, it's traditional players, credit unions, using compliant blockchain tech.
Right.
Not for hype, not just because it's new, but as a serious strategic tool to compete and really innovate in the rewards game.
And that signal, it goes way beyond just getting some Bitcoin back when you buy groceries.
Yeah. What's the deeper signal?
It signals a fundamental active change in the structure of consumer finance. How you engage with money is shifting.
From closed systems?
From those proprietary closed systems owned by huge companies towards potentially more open digital asset value you actually own and control.
That impacts things like stability, transparency.
Stability, transparency, liquidity in your everyday financial life. It's a big deal.
So the whole conversation changes. We're not asking, will banks use crypto?
No. The question now is, how fast will they scale it to catch up with the credit unions?
Because, as the sources say, the future of finance, it's already started.
It has already begun, exactly. Right. Demonstrated by these institutions leading the way now. They're setting the precedent, showing the tech is ready.
Okay. So we always like to end with a thought to mull over. What's the provocative idea here?
Well, think about this. If credit unions, seen as traditional, community-focused, highly regulated, if they're the ones pioneering integrating decentralized assets like crypto into everyday products, what does that tell you about where financial trust and stability might be heading in the next decade?
That's interesting.
It suggests that the market, maybe led by these member-owned groups, sees these compliant blockchain rails not as some crazy risk,
but as the path forward.
But potentially as the most stable, efficient, and trustworthy path forward for consumer finance. They're bringing decentralization into the regulated world and proving it works.
Wow. A fascinating reversal. The community players setting the pace for the giants.
It seems that way, doesn't it?
Thank you for taking this deep dive with us, and for you listening, we challenge you. Watch how quickly other traditional financial institutions might be forced to follow this trend, this compliant trend set by the credit unions. Until next time.